if you are going to buy gold, all right, speak to somebody, and call us, but speak to somebody that knows what they're talking about, okay?
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots, and I'm joined as always by the brain trust himself, Mr. Chase Taylor. On the surface of it, you look at the indexes, finished pretty flat, not a lot there. NASDAQ was slightly negative, down 0.3. S&P up, 10, 15 basis points, something like that. But just hovering right around flat. Same with the Dow, or, we don't talk about the Dow.
Never heard of it.
But pretty significant intraday volatility.
Yeah.
You see the VIX with kind of a steady bid underneath it, just kind of moving higher.
You want me to rip through it all real quick?
Yeah.
Let's. So to your point, pretty flat on the indices. I'll just leave that at that. With that said, though, equal weight was up 0.8, and small caps were up 0.5. So all that terrible breath we've had coming back a little bit, which is nice to see. All world ex-US up about 0.18, so not really much different than our market. Dollar down a little bit, not much. Crude oil up a little, gas down a little. Gold up about 0.5%, but gold miners up 2.5%. Platinum, palladium, pretty decent day. Copper actually down a tiny bit. Yields flat, nothing really to talk about there. And to your point, there was a point in the day where a lot of stuff actually looked really ugly. You had both indexes under their 50-day at one point and under some really big trend lines. But then that I think, honestly, just the technicals of that just helped you. That and a lot of stuff, very, very short-term basis, pretty oversold. Like Oracle just basically goes down every day.
Well, so. and if this is the beginning of a downtrend, which I'm not unequivocally saying it is, I do think it is a lot more likely than most people do. But also just kind of given the backdrop, I would think that if this was the beginning of a downtrend, you're probably going to bounce off of every support level on the way down.
Right. And I saw Shrub, we talked about it today. He's like, made a little bet on the bounce just on the day. And it was in part because he's like, my Twitter feed thinks the world's ending. So that's almost a good enough reason to just be like, well, we're bouncing, aren't we?
Yep. So before we, PSA right here. Before I forget, we'll get talking and we'll forget. I have a million anecdotal stories, so I'm not even going to get into them to bore people. But for those of you that know my background in the mining and gold mining industry. For those of you that don't, my father is still the CEO of a formerly publicly traded CEO of a publicly traded gold mining company. I literally spent summers of my childhood at gold mining operations. Matter of fact, my mom's got a picture of me playing in a mud puddle at like 2 years old in a diaper and nothing else on, right out in front of a gold mining operation.
Sounds like the 80s.
Yeah, totally. She let me stay out till 8 p.m. I was running around with a pack of coyotes. That was just totally normal. But if you are going to buy gold, all right, speak to somebody, and call us, but speak to somebody that knows what they're talking about, okay? Now, I'll give you a couple blanket recommendations. If you are going to buy gold coins, buy gold American Eagles or something just like that. Do not buy a coin that is priced at a higher level than the amount of gold in it. All you want is the metal. You haven't turned into a coin collector. Okay. And it's one of the greatest tricks out there in the book because they're selling you a gold coin, but what a lot of people don't realize is they're paying a 25 to 30% markup over the actual price of the gold in that coin. And you're doing it because it has some theoretical collector's value. Well, guess what happens when you go to sell it?
The collector's value disappears.
they're going to buy the metal back from you.
Yeah.
Okay. So A, don't buy any numismatic coins. Just get the regular government issue, just the gold American Eagles, right? Same with silver American Eagles. The other thing, there's absolutely zero need for these gold-backed IRAs. And as a matter of fact, I've looked at it, and I think the only real reason to have a gold-backed IRA is so the gold-backed IRA company can charge you a storage fee.
Right. And that's if you're lucky, you get the storage fee. Because if you're not lucky, like you said, you're going to get a huge markup on the front end. It could be a thing where you're like, here's $100,000 for my gold, and then you call 3 days later and you're like, what if I liquidated today, what would that be worth? And they're like, oh yeah, 60. And like, that's how you know it's a problem. Now, if you do call, they're going to find a way to not tell you it's 60. Probably there are a lot. I'm not saying none of these are reputable, but man, is there a lot that are not reputable. And for people thinking about this, and first of all, the reason this happens to a lot of people is the marketing is aggressive. It's very cleverly targeted at a group of people that they know are susceptible to wanting to do this, and fear is a marvelous salesman for gold. So just be incredibly careful with that stuff.
Yep. Hey, and listen, and rather than a gold-backed IRA, let me give you an idea that's better. Okay. And it's better. You're going to pay less. You're going to pay no fees on an annualized basis. You're going to have access to your gold. Here's one of the problems with gold-backed IRAs. I ask people why they're buying gold, and they're like, well, in case things get really bad, I'm going to need the gold. Okay. But it's being stored somewhere else. You don't even have access to it physically. Okay. Second of all, it's to protect my purchasing power. Okay. And you think it's going to go really high, right? Okay. Well, if you think it's going to go really high, why do you have an account that is going to charge you the utmost in taxes? Right? If you think gold's going to go really high and you need it because the system's going to break down, A, you should hold it somewhere where you can immediately get your hands on it, A, and then B, hold it via something that doesn't take 40% off the top if you sell it. Now, maybe there's taxable reasons why you would need to have it in an IRA. So I'm going to give you the alternative. Google self-directed IRA. Okay. Once you set up a self-directed IRA, guys, and it costs usually less than $100, between like 50 to 100. I think one company we use is $45, whatever. You can move as much of your IRA funds into it in a direct transfer. It's non-taxable. It doesn't cost you anything. If you want us to help you do it, we can help you do it too. Okay. And then you take that money and you go down and you go buy a bunch of gold American Eagle coins. And you go buy yourself a safe and bolt it to the floor somewhere in your house or your closet where nobody knows where it is. Now you have a gold-backed IRA in your home and you didn't pay a markup. You're not paying storage costs, and you can get your hands on it whenever you want. There is no and I'm not trying to dunk on these businesses. I'm sure good people run some of them. I know some of them are pretty shady.
They're pretty bad.
Yeah. But there's just no reason to have one of those, guys. There's no reason. It serves zero purpose. It's not tax advantageous. You don't have your hands on it. You're paying unneeded fees. Like doing one of those versus what I just told you is like advocating to own ETFs instead of mutual funds. It works better. Just trust me, right? You're going to pay less in fees and you're going to get better performance.
The last thing I'll say about it is the names of these things remind me a lot of how legislation's named, right?
Oh God.
Like
whatever it says it does, it doesn't.
Like if it has a really appealing name to you and it's a really patriotic name, like
the Patriot Act,
it's almost like the scale of that is equal to how much you shouldn't trust it.
You're not American if you don't vote for this act.
But yeah, that's pretty much how a lot of these are named. So if it has a name that's wildly patriotic, tugging at your heartstrings, I would research that one harder than the one that sounds like a normal business.
Yeah. Anyway, just hear me out. If you have money in one of those, undo it. You don't need to pay the storage fee. Like I said, then you can transfer that money to a self-directed IRA, pull the money out, go buy the physical coins. And for the fees you were charging for the storage on your gold, that'll pay for your safe, right? Like there's just no reason for it. Yeah. Or just open an account and buy GLD. Everybody, GLD's all paper. I've been listening to that for 15 years. It's not. They own futures contracts. They're as good as money. They own the gold. Okay. And everybody goes, the gold's not going to be there. If that were the case, you wouldn't end up without gold. Gold would just instantly reprice 2 or 3x higher. You know what I'm saying? Like if there was a call and there wasn't enough physical gold, It's not the way the exchanges work. They wouldn't pick who gets the gold and who doesn't.
Right.
It just gold would get repriced.
Yeah. And I mean, all that stuff's audited. It's not like you don't know that if they have it or not.
Yeah.
If we're to the point where we're so Mad Max that's going on, like where your gold's at, gonna be at least your worth.
No, and if we're Mad Max, like I've told people, I go, guys, if things get really bad, gold is useless, right? You want the things that gold would typically buy you. Because see, right, like I'll take guns, you get gold. You know what that leaves me with? Guns and gold.
Yeah, at that point, your chickens that's your real gold.
Oh, yeah. Yeah. Oh, are you kidding me? A package.
If we go Mad Max, I'm going to be begging for eggs. So,
well, I have chickens, my friend.
I know, that's why I'm bringing it up.
They're old.
You're just like Scott Besson, you're a proper farmer.
Do you know, I've never even fed those chickens. I have actually never even touched one of them. But here's something I didn't know. Here's the beautiful thing about this podcast. It really is a 360-degree education. I mean, we're going to hit on everything from football schemes to chicken farming. I'm a gentleman chicken farmer. When it gets cold and the chickens get older, they'll quit laying eggs in the winter. Had no clue. I figured that out this year. So there you go.
We learn something every day.
Every day. Okay, so one other thing. Oh, yes. Okay, yeah, on the gold thing, there's two ways I think you should own gold. If you want to own the metal, own it physically in your home. The other way to get exposed to it is by solid, cheap gold miners. So I will always, the people that say they don't work, yeah, they said that 150% ago for the gold miners we bought. So whatever. Anyway, that's the deal. Physical in your house or gold mining companies. You don't need gold any other way. Another one that we brought up, and I'm going to give you credit for it because this was one you brought up today during a discussion that we had before we came on here. And I went, I thought I had some good scenarios. Trying to illustrate to people and explain to people, especially our clients, about what we mean when we talk about record delta between valuations of company. What we're referring to is that, look, no company is exactly the same. But one of the ways, if you're trying to figure out whether a business is trading at a good price or not, one of the ways that you go look at that is to, like, same way with houses, right? You use comps, right? And no house is, that's actually a very good analogy. No house is a perfect comp. Same is true of businesses, right? And beauty lies in the eye of the beholder. But what you expect to see in a market, and actually one of the characteristics of a market, is uniformity to some degree, right? Seeing themes, right? Realizing typically in a market, you start looking at these different companies and everything else held steady. You should see, okay, here's a correlation between their balance sheet ratios. Oh, I can see how that's I see why that company's trading at 15 times earnings and that one's at 22, right? You can kind of come up with these numbers. When you look at U.S. stocks comp to pretty much everything else in the world, and when I mean everything else in the world, I mean every other U.S. market, the story in the comp is pretty much identical, meaning you're going to have different levels of, valuation gaps. Some markets are trading at, 1/3 U.S. valuation. Some markets are trading at 1/6. But what you see is pretty consistent, meaning whatever positive thing you find that leads you to a valuation of X in international markets typically is correlating to something like 4 to 6X in the U.S.
Yeah.
And like I said, it's pretty consistent. A lot of across tons of different industries, tech, commodities, pretty consistent. And we've been using a South American, Central American airline company that we own and comping that to U.S. airline companies, and it's a good comp. It's not as good as the one that you threw out today. Yeah,
and I think we mentioned this maybe on the show like a year ago or something.
We did, but not in the way that you said it today.
So the way we did it last time, I think, was just to it was more to illustrate just China, U.S. stuff.
Right.
But this goes deeper and to your point. And I just pulled all these numbers. And what we're talking about is Tesla and BYD. And the reason we were talking about it is I was talking about how, like, I would actually really like to buy Tesla for, like, the business because it's doing all kinds of stuff I think has an awesome future, but I can't pay this. And then I was like, and the crazy thing is, like, BYD is doing all this stuff too and more. Like, I don't think people realize, BYD makes awesome buses and trains, and they literally manufacture iPads like for Apple.
Isn't there talk of them manufacturing robots as well?
I'm sure they will. They make drones.
They're a really good
forklifts.
Even revenue levels are similar to Tesla. It's a really good comp.
Yeah. So for revenues, BYD is 118 billion in the last year. Tesla is 96, so lower. And for profits, you're looking at like 6 billion for BYD, 5 for Tesla. So their net income is pretty close, despite BYD having more, a little bit higher revenue. But the PE for BYD is 22. And for Tesla, at current check, 308.
What about the growth rates?
That I'll have to look up here in a sec.
Well, let's put it. I believe BYD is north of 20.
They just slowed down in this last quarter. I know, like a good bit, and it hit them. But
okay, but Tesla's
theirs
negative.
is more volatile, I think.
Tesla's revenue is negative year over year.
Well, maybe in this last quarter. Remember, they I think they got back to some growth in this last quarter, but that was
but it was
regulatory.
It was quarter over quarter. If you added it to the if you comp the last 4 quarters to the previous 4 quarters, they're still negative.
Right. Yeah. If you go
the last 4, looking at the last 8.
So, but price to sales is like 1 for BYD and like 12ish for Tesla. So that tells you a lot.
It's more than that. It's got to be 15 for Tesla because they're slightly lower than 100 billion in revenue and they're at 1.5 trillion in market cap.
So trailing 12-month revenue growth for Tesla is negative like 1.5.
Yeah.
And it's positive for BYD. So if you go 5-year growth, about 500% for BYD and 230% for Tesla. So more than twice the growth over the last 5 years. More growth year over year. So even actually more growth in the last quarter. That even quarter over quarter, they're beating Tesla in growth.
And if you sat these now, people go, but Elon Musk and okay, yeah, got it.
Yeah, go read about BYD's founder and where they came from in the last decade.
And look at how similar those companies are positioned. And that's that you were talking about it today. BYD is trading at what, a $200 billion market cap?
No, they're 800, I think, and something.
$800 billion market cap? Oh wow.
I mean, 118 in revenues. So
yeah. Well, I thought you said they're trading at 1x sales.
Well, that's what I saw. So I see what you're saying.
Are you sure that's not that's got to be 8? That's got to be 800. That's 800 billion Chinese.
Let me.
That's got to be renminbi.
This is what happens when you use like 4 different things to look things up.
It's got to be the currency. Because 118 times like 6.5 would get you to 800. It's got to be, that's got to be in Chinese, in yuan.
Yeah, it probably is.
Yeah. So okay.
The market cap. Yeah. Okay.
Yeah, because they're trading at literally, what would that be? It's like 1/6 the valuation of Tesla. No. Excuse me. 1/7. They're trading at 1/7 the value of Tesla with significantly higher growth, higher profit.
122.9 billion. It's the US dollar market cap.
And if you want to know why we like international versus US, that right there is a perfect 2-stock summation of our thesis.
And to be clear, they're making better products at a better price.
And that are beating the hell out of Tesla head to head.
Yeah.
And people are like, they're not building a robot. Yes, they are. That's coming.
I mean, they're already apparently making drones for like one of the biggest drone makers in China. They even have a car you can buy that has a drone attached to it. Like it's like on the roof of the car, so you can be driving your like SUV and just fly your little drone off of it.
I need that. It's very James.
I mean, if you're a real estate agent and you're doing your own imagery.
Yeah.
I don't have too many other use cases.
It's a James Bond use.
You can check in on the chickens.
There you go. I see.
While you're driving up the driveway,
got to keep an eye on those guys, man. Especially when the weather gets cold. So I've learned. No, I just think that is such a beautiful, meaning if you sat down and read about these two companies and looked at the price, there's nobody that would pick that one. There's just nobody.
I mean, Charlie Munger picked BYD
Yeah.
a long time ago.
Yeah, that's true.
That's a crazy story. Like, if you look at the shape of BYD at the time he made that investment, like, it was not clear this was going to happen. He just got to know the guy and was like, I want to give this guy money.
That's really what it was. That was a personal investment on their part.
It was just he recognized the founder was that good.
Wow.
Yeah. That guy's, I mean, same thing for Li Lu. When he met Li Lu, like, this is the only person outside manager he ever gave money to, and realized how special the guy was.
That worked out pretty good.
Yeah, Li Lu was pretty good at his job.
Yeah, he's okay. I mean, I don't know that I'd hire him, but
I mean, he'd work under me, right?
Yeah, I mean, he could be your lackey.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
No, listen, and I don't want anybody to think that I'm sitting here, waving the red flag and telling you how great China is. I'm using that as an example, and I'm using it as an example because it's two stocks that everybody knows in two industries that are highly visible and watched and discussed. I don't think we need to talk about the risks invested in China. We have covered that many times. That is why when we talk about making our bets abroad, will China be a part of that bet? Yes. Will we do it in greater size than they represent in the MSCI index? Yes. Will they be the majority of our international exposure?
30% long
No, no. And for all the reasons that we all know, like, I'm not at all saying, but guys, at the end of the day, something you'll learn about investing is that despite valuations being an extraordinarily bad timing tool, when they get extreme, you just have to, you just got to kind of close. I don't want to sound like, belligerent, but you got to kind of just close your eyes to the risk when the value gets that extreme, when the delta gets that wide between assets. Because, every bit those valuations spread, the way you got to think about it is it's de-risking the asset that is cheaper, and it's increasing the risk of the asset that's more expensive. And when the underlying performance of the businesses are inverted, you've got to think financially, right? I can't tell you this is going to go up a lot, but what I can tell you is it is destined to outperform this. And there will be exceptions, but if you hold to those kinds of rules, you're probably going to be right 80 to 85% of the time.
Yeah. And I think my favorite part of this comp is I think one of the stories people tell themselves in the US to buy Tesla is all these like right tail possibilities of things like robots and flying cars and stuff. But that's what makes the comp good. Is like, you don't think BYD can do that stuff? Like, they'll probably beat them to it. If you flipped the valuations, I would be buying Tesla hand over fist if you flipped the valuations. If that was one-time sales and had a 22 PE, I couldn't buy enough.
If you just flip the valuations, I'd be buying Tesla even if it still had if you flip the valuations and everything else was still the same, the negative growth rate, I would do the same thing too.
Back up the truck to it.
Yes.
And 300 times earnings?
No, and that's so, where everybody's sitting there goes, shouldn't with Tesla. I'm just sitting there going, look, I'm not going to tell you where you should or shouldn't. I just firmly believe you're asking the wrong question. I think the question should be should or you shouldn't with BYD and other assets like that. It just seems really, really clear. And, the other side of it too is, we've said this 100 times, but it begs repeating. Anytime you've got pretty much anytime you get the ability, now I'm not talking one stock to the other, but I'm talking markets. Anytime you get the ability to invest in historical extremes, if you're betting on mean reversion, you want a disgustingly overwhelming percentage of the time.
Yeah. It requires patience and it requires proper position sizing.
Yep.
You don't go all in on it and hoping it's going to work in the next month. And if it doesn't, you blow up or something. But if you go small and you're patient and let time to take care of everything else for you, like, yeah,
it'll work.
This stuff, obviously, I mean, and the beauty for a lot of this stuff is the paying you to wait. We were talking about the Latin American stocks looking like they're breaking out on a long-term chart against the S&P today. And it pays a 5% dividend if you use the ETF that just grabs like the 40 biggest, names in Latin America. 5%. You get paid to wait, and you're now winning the relative race in a big way.
Yeah, I don't know the exact percentage, but I believe, like, because of that, our value portfolio right now, I believe the yield on our value portfolio is like 2x our annual expense charge for
I'm gonna
clients.
drag that spreadsheet back into Bloomberg and see where we're at on that.
Yeah, but I mean, that's the other nice thing about dividend income, right? Like, it's clients are like, is that net of fees? And I'm like, yeah, it's also net of dividends, right?
Yeah,
like, meaning,
and every time the Fed cuts rates, that's more important because your little cash account, T-bill account, or savings account, CD, whatever, that's the spread of the dividend over that. It gets more important with every rate cut.
Well, that's another
when
thing.
T-bills were 5, man, who cares? But
there's another thing too, right? Which is, especially if you have a durable dividend, meaning, the company can continue it. If you think that you're in a dollar weakening cycle, and more importantly, that you're in a rate cutting cycle, which we are by definition, that typically tends to push the valuations of dividend paying stocks higher.
Yeah.
Just because that income level, because when the yield on the 2-year treasury drops, that doesn't have a necessary impact on the yield of Eli Lilly or something like that.
It's funny you mentioned this because it ties into everything we were just talking about too. Some of these like really cheap markets around the world have really boring companies that pay a really big dividend. And if you think about it, and like they can't grow, the stock price will never go up, over the last decade or whatever. You look at it and it looks like dead money. But if you think about it from the perspective of the individual investor in that country, that dividend means everything. If you're in a country that can't grow, your savings account will pay nothing. This company is essentially your savings account. Like, you don't need it to go up. You just give me my dividend, man. Like, be my T-bill that I can't get in my country. Think about Japan, right? If you had some, just basic industrial in Japan that paid a 3-4% dividend, while the
JGBs
Bank of Japan was negative, right? Yeah, like that's a big deal.
Yeah.
Now they have to slowly realize, like, oh, wait a second, our revenue's growing now. Like, like stock price is going up now. Like, things are changing. But when you're stuck in that regime, that dividend's everything.
Yep.
We're not used to that because, like our stocks go up 30% a year. Who needs a dividend? But that probably won't happen forever.
Probably not. You talk about 5-6% dividends. You start looking around these markets, you can find 8, 9, 10, 11, 12, and in companies that are not in trouble.
Right. In America, usually it's going to be a dumpster fire that pays that.
Yeah.
And even here you can find them, but that aren't a dumpster fire. But abroad, you can find companies that are growing and appreciating in the equity price.
Healthy balance sheets.
Have a wonderful balance sheet, wonderful income statement, and still you're like, here's your 8%. Like, congrats. Like,
it's wild, man.
And then if you ask the average, hedge fund manager in New York, do you want this one? I'm like, oh no, gross. Like,
yeah.
Like, no, I need some more meta. Like, oh, okay.
Yeah. And look, I understood why that's worked. I just think that all of the factors that drove that outperformance are flipping around. And, one of the big ones is valuation. And it always frustrates me when people try to argue this. And I'm like, guys, this is the most simple concept in all investing to get. Every percentage point your stock goes up or is going to go up is one less percentage point of growth that you will get at some point in the future. So by definition, right? Now, that could be 1,000% away from here. But I'm just saying, by definition, and it's just bizarre how that's kind of been flipped on its ear. You know what I mean? Nobody wants to buy something that's cheap and's got a bad chart anymore.
Right.
And look, guys, we adhere to technical analysis here too, and it's part of our practice and all that kind of stuff. But the best winning investments of all, well, not across, but typically of the best investments in the market every single year, almost always one of them was a broken chart, right? Where it just got too cheap, right. Now, a lot of broken charts get more broken and companies go out of business too. I'm not saying that, but I'm just trying to make a blanket statement about why value investing, when done correctly and the assessments made are right, it's why it doesn't just work, but can return you massive, massive profits, especially in a momentum-driven world, and a world that's been momentum-driven. Why? Because the value side of it's been ignored. So whatever opportunity that there does typically exist in the value space or the value factor, when you're in a market that doesn't care and hasn't for a long time, by default, you got to know there's better deals there than there normally would be.
Yeah.
It's just not going to be as picked over. Right. And, when you look at it today, and another metric we've said before, but again, I think it bears repeating because it's so crazy. Mag 7, 30% of MSCI, all of China 3.
I feel like BYD should be 3, but
you would think. I mean, Tesla's probably sitting there at 5.5 in that index.
And there are some other companies in Asia that are just unbelievably good, and they're a rounding error compared to some, Mag 7.
Yeah, it's wild. And again, like I said, not just talking China, using it because the names are recognized. I could sit here and run you down a list of Latin American names, but probably nobody's going to know them. The Latin American setup is almost identical. The charts look the same. The other thing too, and you've taught me this, and I pay increasingly. It's one of those technical analysis things I have just learned to never ignore, which is the longer the trend, the more deference and the more respect you have to pay a break of that trend. And I'm trying to sit there and think if I've seen a trend comp on markets like that, where the downtrend is that big and that long.
Yeah. I can't recall. The crazy thing is, I remember so many times in the last 15 years where people would call the bottom on EM versus US, or pick a country versus US, pick whatever. And it just every time, nope.
Yep.
New low, nope, new low, nope, new low, nope, new low. The famous last words, but this time feels like it might be different. And the chart is starting to suggest it might be different. You're starting to take out some of those prior potential pivot areas and get above them. So it looks different and feels different. And obviously you never know when too much is too much on the valuation spread, but at some point, just based on the policy aspect, it's too much.
Yeah. And so the other, that's a great point. I think if you're spending a bunch of time trying to think about the timing and when that rolls over, I think you're missing the point. I don't think I know you are. Meaning that, in my opinion, that is one of the only surefire ways that you'll miss it. Right?
I will say this. You could have made a good valuation argument, the one we're making 5 years ago, and you would have gotten your teeth kicked in. I just think it's gotten to the spread's gotten so wide, like we just outlined with Tesla BYD, that it's so extreme that I think you can just look through it and be like, I don't care if this doesn't work for 3 years.
And here's the point I was going to make. You could have absolutely made a similar valuation argument. I mean, it's more insane now, but it was insane then. To me, here's the difference. The dollar's in a completely different place. And when you tell me, if you were to say to me, Zach, can you envision a scenario in which U.S. equities significantly outperform EM and China equities over the next 2 years? And I'm like, yeah, I can. A dollar surge.
Right.
I just don't think, I think that game has changed. I think the word is out, right? Remember, currency valuations involve so many more things than just, than what you see today. It's like currency valuations, especially long-term trends, it's kind of like a build up. You can see it coming. And then for whatever reason, one day that dynamic just flips. I think that's the case, right? I think the world also knows that we're not going to clean up our balance sheet. I think the world also knows that there's not going to be a pause.
Whip inflation now with really high rates.
Yeah. Right. You know what I mean? So I think, to me, the difference between today and 5 years ago is just pull up a DXY chart.
Yeah.
And I think when you add that overvaluation combined with that dollar bullish run being over and looking like it's heading back down, that would make all the sense to me in the world about why this is different. I mean, that is absolutely different about this time than 5 years ago. But I think that's it. I think, I think when you look at the issues of the last 12 years, I think U.S. assets made so much sense for so many international investors. And I think the vast majority of those conditions have reversed today.
Yeah. And we talked about before, they got the double win because they got the currency up and the equity up.
Killing it.
Just having one of those legs kind of fall off is a big deal. So if you lose both legs like we did in April, then people have to get some money out of here.
You know what's funny? Think about that. And that's probably another reason why the capital is so sticky. We look at the run that the S&P 500 has had. Think about some of those years where you had the dollar up 8% and the S&P up 20.
Yeah, and if you were in here unhedged from Japan or something, I mean, you just crushed it.
Just crushed. On a currency adjusted basis, you were whipping the best managers in the U.S.
And that's why, like, I'm always citing the returns on the country ETFs. It's why those are so great this year, is because as an American buying this country ETF, you're getting the kicker of the dollar down. That's like it's a tailwind for you.
Yep.
So yeah, Korea's up 90% or whatever. One part of it's the Korean won's down, right?
Yeah.
Or up, sorry.
Yeah. And I just, like I said, I don't see those headwinds going. Or I don't see them going away anytime soon. So before we go here, anything we need to be watching out over the weekend?
I don't know about the weekend, but something to kind of think about is the shutdown. We've talked about this the last couple of weeks, but you're at a point where it's starting to hurt. Like, and I think you can start to see it in some of the high frequency data. I mean, we had the worst UMich consumer sentiment number in history today. And I think a lot of that is the shutdown. I mean, a lot of people are losing jobs now. Now it's getting hard to fly because they're reducing flight capacity. A lot of people aren't going to work, obviously, in the federal government, or they're not getting paid, which that impacts. That's enough to impact consumption on a level that is felt on the aggregate.
I want to say in McDonald's numbers or something. Was it McDonald's that sat there and I think they said it was a startling number. They said in their low income category, sales were down like 10% on the quarter or something like that. I mean, just poof,
yeah,
the bottom fell out.
Going back to like the student loan having to get repaid, now the shutdown, like, and there's already just stress on that low end. And it's funny to me, obviously all this was obvious 2 weeks ago, right? But now all of a sudden, every politician is just basically hashtag affordability everything. It's like because we had, a couple of elections Wednesday where it kind of came clear that was an issue. Now all of a sudden, every politician, all they can talk about is affordability.
All these idiots would have to do is
not paying attention.
Just go to a suburban neighborhood, knock on 5 doors and talk to people. I mean, these people are so out of touch. Do you have any family? Do you pick up the phone and call somebody? Call some friends from high school, for God's sake, right? Like,
maybe ask your private driver or your private shopper or whatever.
God, man, how out of touch can you be? And the reason I say that, I look at the average politician, I make substantially more money than they do. And yet I understand what the prices have done to people out there, and you see it every day. How is it those people are so checked out?
Right. And now it's becoming its own like little, DC meme where that's all any of them will talk about.
Oh,
they're all running on affordability now.
I hate politicians. I just hate them. Anyway, that does it for me. You good?
Good to go. Yep.
All right,
Have
you guys.
weekend.
Yep. Have a wonderful weekend. We will see you on Monday. As always, follow us on social media. We're both on Twitter. I'm at KYR Radio. Chase is at Pinecone Macro. Get the video feed on YouTube. Just search Know Your Risk Podcast. Go to knowyourriskpodcast.com. Subscribe, download. You guys know the drill. Anyway, see you next week. Have a great weekend. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.